Good morning, ladies and gentlemen. My name is David Breer. And welcome to episode 37 of the 11FS FinTech Insider Breakfast Show, brought to you this morning by our good friends over at MyTech. If you don't know, MyTech delivers bank-grade identity verification with the highest possible assurance levels, massively reducing risk, fraud, and costs. If you don't know, in this show, we bring you the best and the brightest around the fintech and banking landscape every single weekday straight into your homes at 8:30 BST. I mean, today's a little bit of an exception to that because it's not about banking or fintech. It's going to be all about insurance. And I'm thrilled to have Mr. Nigel Walsh, who is a partner over at Deloitte Digital. Today, what we're going to be talking about is all things insurance, what's happening in the Insurtech scheme, and actually everything that's happening in the industry, given everything that's happening with COVID-19. So, I mean, probably enough from me at this stage. Nigel, thank you so much for getting up early. How's it going?
Early, I think like you or like many of the folks that listen into the show, we've all got young kids and stuff, right? So, yeah, I'm fantastic. Thanks. I'm actually quite enjoying the current moment, and enjoying the t-shirt. Actually, I think you've picked it out perfectly. I was trying to find my Insurtech Insiders one, but "Don't be a banker" is the perfect phrase for today's show, I think.
Do you know, it was a good one. It's the guys from Atom Bank sent me this, and I really like it. They do some pretty decent swag, I have to say. But as always, guys, we love getting questions and comments. So if you chuck them into LinkedIn, we'll sort of weave them into the conversation as we go. But Nigel, for anybody who doesn't know you, obviously, you know, we're super close. But for anybody who doesn't know you, do you want to give us a bit of your background and what you do at Deloitte?
Yeah, perfect. So, been here about 4 years. My focus is very much technology and insurance, and how insurers can leverage that for good. So everyone's talks for years about how insurers and banks, or banks are a few years ahead. I think the fintech stroke insurtech scene has really closed that gap quite a lot, with big organizations like Lemonade and Poncho in Australia and a bunch of others putting some great investment into bridging that digital divide. So my job is basically joining the dots between technology, whether it's disruptive technology or new customer service technology, and some of the insurtechs together to make sure they get the best experience for brokers, for customers, for agents, and so much more. And I do the odd podcast now and then.
You sure do. And I mean, I think you're literally the most passionate person about insurance that I've ever met. And I mean, I'm a big fan of insurance. I started in insurance before I moved into the sort of banking side of things. But you just love this industry, and I think that just comes through so much in your content and how you speak. So, I mean, when was that love kindled?
It's a really interesting one. I think the passion, I was chatting briefly to Gemma, we exchanged messages after the show yesterday, and the thing I noticed about some of the guests that you had versus others, or listening to Dave Birch on Monday, but passion thrives through everything that you do. And I think you go to any of the founders that are out there and they say, do what you love. And if you're lucky enough to do that, then you put yourself in a position that it's not really a day's work. It's a day of spending more time with people you enjoy working with and things that you enjoy doing. So for me, there are moments, don't get me wrong, that is definitely a labor of love. When did it kick in? I mean, I've been in insurance for probably 10, 12 years, or very focused on insurance for those periods of time. And it's when I get challenged by customers or partners to go, how do we keep making this better? And that for me is where I go, well, how do we take this and make it from a real customer angle or a broker angle? And whilst I'm a tech guy, I'm not a tech guy for tech's sake. Sure. And all too often you've got a fintech or insurtech that's got really cool stuff, but they're solving a problem that no one needs to solve. So I always try and bring the lens to it that says, actually, does this solve something that matters to people or not?
Yeah, and that's the key, isn't it? I mean, if you can do things that you love, it stops feeling like work at that stage, doesn't it? Thank you so much for everybody who's joining us over on LinkedIn. Loads and loads of people kind of jumping in. Hey, Steve Brown, thanks for joining us this morning. Peter Smith, thank you for joining us again. Good morning, Janet. Thank you very much for joining us again every morning. Mark Pell, good morning. Simon Schofield, good morning. Helen Child, hello, Helen. Thank you very much for joining us this morning. Natalia, thank you for joining us. Loads and loads of people. So if you've got any questions for Nigel on insurance or insurtech as we go through this, chuck them in and we'll get to them as we roll through. Nigel, I mean, how have you found this period of time? You know, we've all moved from, I think you and me we sort of bump into each other in a bar or somewhere where we're catching Wi-Fi or a plug to plug in our laptop every so often. So you're no stranger to traveling here, there, and everywhere for the work that you're doing, both locally and internationally. I think every time I catch you on LinkedIn, I think you're somewhere in some airport traveling to do something. But how have you found this new change in terms of staying at home and working from home remotely?
I mean, it's probably the longest period I've ever spent in one place. I guess our industry, if you spend time in consulting, you're used to being on client site, or I mean, I've not had a desk or an office for years. We all hot desk and whatever else. So I've actually found that odd in some instances being at the same desk for, what is it now, 7 weeks, 8 weeks. I've stopped watching the news in some instances because it's just got a bit monotonous. I think the first few days were exciting. The novelty definitely wore off a while back. I'm sure, like everyone else, I've had bad days as well as good. And there was actually a really bad week. I think it was like week 5 for me, that I felt it was all getting too much. And it just felt, it was like, oh my God, it's never going to end. But then I think you just bounce back out of it again. And with just chatting to friends and colleagues and whatever else. So that side of it is pretty okay. I can work from anywhere. We're very fortunate in that way. But you go into consulting because you like people, you like different environments, you like travel, for example. So that part I found quite hard because I really miss parts of that. But you also reflect and go, some of the things I used to do, whether it was an hour-long commute each day or whatever else, I may not do as much. I mean, if I'm being really honest, if you asked Emma, my wife, the same question, I never work from home. She hates me being here. I'm noisy. I walk around on the phone. I pace everywhere. I'm always in the snack cupboard. I mean, it's so there are good sides and bad sides. And of course, getting to see the 2 kids every day is brilliant. But there are, I'm sure, like many others out there, are days you walk into your working space at home and you walk back out again 16 hours later, having only come in for coffee and food, and that's it. So
yeah,
definite upsides, definite downsides. Thankful I can get outside the front door and go for a walk around the block or whatever else now and then as well.
Do you know? I think my coffee addiction is getting to new extreme levels right now. I think that's the worst thing that's happening to me. I'm going through Nespresso pods like you wouldn't believe. Do you know what I mean? Like, I think we should get them as a sponsor of this show. I'm just saying, because like I'm living that brand right now in terms of caffeine fueling me through the pandemic. You know.
It's funny you say that. There's an active online Twitter debate, no surprise for me, with a bunch of folks going, because I've asked for better coffee. So I love the machines and whatever else. And if you look online, you'll see people recommending huge numbers of brands. You mentioned one the other day. And I am now trying loads of other things that are coming through to go, I miss a good coffee shop you can walk into and get a really nice coffee. That is a definite big absence in my life right now.
Well, that'll be top of the list when we're allowed back in then. So, I mean, how's this affecting the industry then? Because I mean, the insurance industry, whenever there's a very large event, you know, it's usually very localized, isn't it? You know, a flood, even a tsunami, you know, it's localized to a certain region or a certain country. In this instance, the pandemic is affecting everywhere seemingly at the same time. How are insurance companies able to deal with this at this level?
Yeah, it's fascinating, and actually, I think it's a plus and a negative in that everyone's going through it right now. So the fact that every single individual world over has experienced some level of disruption, displacement, or change means that people are able to understand whether you're a personal lines customer from home and motor, a commercial customer, a specialty customer. I mean, if you asked anyone, I've talked about this a lot, if you asked anyone, could the global banking or financial services and insurance industry move home overnight and not skip a heartbeat, we'd have all sat back and went, no way, it's a 12-month program, if not longer. But it pretty much didn't, right? So, you know, Lloyd's closed its doors on the underwriting floor for the first time I think it's in its history in 300 plus years, or since the Second World War. I mean, there are some fundamental changes that have gone on for us to be able to keep working and doing what we're doing. I'm really proud of how the insurance industry as a whole has reacted. You'll have seen some stuff we put together that showed how world over, whether regulators or companies themselves took the lead in doing things like, and very publicly, rebates on things like car insurance or motor insurance, where we're simply not driving. So as a result of not driving, people are going, well, why am I paying for a service that I'm not really using? So the US, in my opinion, took the lead on that, and almost everyone jumped into that quite quickly. In Singapore, for example, health carriers, or actually I think it was the government that said everyone's now we're going to mandate a 6-month payment holiday or payment freeze, so people aren't worrying too much about cash flow. The commercial and specialty space in the middle, or the SME space, is where most of the traction or reaction has been around whether you're covered for this sort of event or not covered for this sort of event, which of course is why insurance is here. There are some great stories in the press, and there are some less great stories. And I you've probably seen about your point about passion. I go through the Sunday papers often and go, why is every story about insurance the bad ones, not all the good ones where we've saved lives or put people back in homes or whatever else?
Yeah.
But I guess those don't always sell newspapers.
It does. I think there's an interesting thing on that, isn't it? It's like the insurance industry does get in fact, I think many industries do get a bad rep because, like you say, I think negativity sells, doesn't it? I think the sense of the people sort of writing those headlines, it's not when somebody, because I guess the issue with everybody could look at their car insurance right now and go, I'm not using my car, I could just stop having this insurance. But if you have an uninsured car sat on your drive, all of the paperwork and all of the forms that you have to go through to let people know about that, actually most people just wouldn't bother. So the insurance industry being much more proactive about that, as you say, it's them being really consumer centric to make sure that they're doing the best thing for their customers, isn't it?
Yeah. I mean, and we had on the podcast with James Blackman from Buy Miles and Freddie from Cover, who are massive proponents of usage-based insurance and all those sorts of good things. And again, we talk about how insurance is a true utility. How does that then map itself to the ways and means in which you live your life? Now, I almost promised James York I wouldn't mention cake or ingredients, but in essence, this whole utility has to come together somehow. And again, the conversation jumps back to, well, should we all be in usage-based insurance policies? So this is the first time that we've all gone through this event. And I think people will start to think further now about the business model of what we've got, so that when our usage goes down, it's mapped back to the price that we pay. But of course, insurance doesn't work that way. Insurance is about risk pools. Insurance is about smoothing all those things. So people complained when there was you're not going to please everyone all the time, right? Period. People complained when there was a flat discount fee given to everyone, but you could argue some key workers or construction workers or frontline staff are using their vehicles more and others less. But actually, I think that it gives you the positive sense of community insurance that if it's applied to everyone, not just the usage, it makes a slight difference to the community that we're building in that space. So you're not going to please everyone all the time, but I think those business models will definitely take people a chance to relook at what we could do in that space.
Yeah, and I think it's I think as we've talked about this a lot before when we've caught up for a pint or a coffee or whatever. It's the sort of human side of the industry, whether it's insurance or any, that really has to sort of come through when people really sort of need it. So it's great to see, as you say, those big companies trying to do something. I mean, what areas are you sort of seeing within insurance that's been affected most? I guess, claims is probably an area where there's a lot of activity right now, because I mean, particularly for things like travel, then actually there's a lot of areas, I guess, where people are trying to figure out. I know for lots of flights that I had, it was that merry dance of they weren't canceling it until they had to cancel it, and should we claim on our insurance? So there was lots of different things there. But I imagine the claims area must be rife for change during this period.
Yeah, it's a really valid point. And the ABI in the UK had some good stats. So the Association of British Insurers has some good stats around what's been paid out on business insurance and travel insurance. Wedding insurance and events has been hit. Again, travel is interesting because, like you, I had flights pushed and pushed and pushed and pushed until the very last moment. They said, no, we're going to cancel all these things. It gives rise to parametric covers. And again, you'll see more people go, well, why am I even going through a claims process if you could automate the whole thing for me and make it nice and simple? So we see the acceleration of lots of things that have existed for a long time. I mean, I always go back to telematics is 25 years old. It just took smartphone and bandwidth to make it accessible to everyone. Parametric insurance, these automated claims have been around for a long time. Imagine if that was applicable to everything that you do, and you got an email going, David, don't worry about your flight. It's being cancelled. We've rebooked you and credited you your X, Y, and Z automatically. So that whole thing around convenience is really lovely. Claims in general worldwide, though, are probably down between 70 and 90% because there's less road users, less accidents, less even though there's traffic there, people are driving more carefully. Although some of the police stats, of course, are showing increases in speeding and all that sort of stuff. If you're at home, one of the big perils or risks we see, of course, is something called escape of water. But if you're at home all the time, the damage that can do, even if you're out of the office or out of the house for 8 hours during a working day, is much less. So those claims volumes are down. Business premises aren't being accessed. So claims generally has been hugely affected. Of course, if you have got a claim, then how do you get someone round to your house to go and do something if it is broken? So they're triaging those. And I think there's a report that my colleague Mark Patterson was sharing with me that said there's something like 16,000 vehicles or thereabouts on people's driveways that just won't move, and we'll end up with a call out to an emergency service to recharge a battery or whatever else. So there's loads of things that will start to spring back into action as we slowly bring the society back into recovery mode that may bring a surge back in claims in certain places.
Yeah, it's going to be, like I say, getting the country and getting the world back online is going to be it's going to be really interesting to see, like you say, what stopped working over this period because we haven't been really using it. But have you seen I mean, in the banking industry, we've seen a very difference in terms of the different response from maybe the incumbents versus what the fintechs are doing. Have we seen a similar sort of difference of response from insurtechs and the traditional insurers, or has it been quite consistent in terms of people handling consumer need?
I think it's been quite consistent. There's definitely differences, and I think you can break them down into, and I was asked this the other day actually, insurtechs that focus on B2B, i.e. enabling insurers to do things better, whether it's data, whether it's new platforms or technology, or whether they've got a market themselves. So if they're doing B2C insurance, so for example, the folks over at Alaka, so Toby and the team, the surge in cycling that everyone's pushing in a green recovery, will see people grow to that space, I think so. And there's plenty of other folks that do cycle insurance and personal liability. There's an article in the papers yesterday that talked about this, and do I need personal accident cover? So those sorts of things we'll see as a surge, and what they're doing to help people. If you're B2B, how you then go and do things like property assessments and stuff like that. So the Flock, and Ed's been on the show a few times, have offered up services to go and do remote monitoring or remote reviews. So they're using their technologies and capabilities, and they've offered up thousands of pounds of free cover in some instances to enable people to try these things they wouldn't have normally tried. So I think they're really, really good. The flip side to that, of course, is equally there's people out there that had motor products or things that people don't need anymore, travel insurance startups. And of course, if your market's gone, then I feel kind of, sorry is the wrong word, but I feel it's a tough space to be right now. If your market's moving, your customer base has disappeared. We're all in that boat. There's nothing we can do. So unfortunately, I think no matter what, we'll see fintech and insurtech businesses come to a grinding halt or pause, and hopefully recover once we're back out of all this sort of stuff.
Yeah, it's going to be interesting to see what sort of normal looks like on the other side of this, isn't it? I mean, I laughed when I saw the Treasury that basically said please use bikes if you can bike, and I was like, look, I live in Norwich, I work in London, like if I biked to work every day, I'd have to set off at about 2 a.m. and I'm not sure I'd be able to walk at the end of that week. So,
I'm about 35 minutes out on the train, and there's friends of mine around here that are saying, do I get an e-bike and not use the train? Do I get a scooter? I'm like, if you get a scooter, you're probably going to make it to maybe Hampton or Camden Town at best, and then you're walking, my friend. So
and carrying it at the same time as well, right? But
they're heavy. Anyway, those things are really heavy.
They really are. It's all the battery, and then it's all the battery, right? Some really good questions for you over on LinkedIn that we can kind of start getting into. So Natalia Zurowski. So Hey, Nigel, hope you're well. Do you think insurers will start to more seriously consider partnerships with insurtechs post this period? Is this kind of opening up new opportunities, do you think? Because I guess speed in terms of doing these things, and actually what we've seen definitely on the financial services more broadly is COVID has encouraged people to start thinking about doing things differently. So do you think that'll drive new partnership opportunities for the incumbent insurers with insurtechs, Nigel?
Yeah, very much. I'd also say that before COVID, though, partnerships and insurtechs was actually really strong, but almost too strong. I think this is what fintech went through a while back, where they went, enough of the partnerships already. Let us work out how we scale these things in your business. So I think it will drive more pace, but in a very focused area about things that matter, not just partnerships that will, hey, we've ticked a box for the board to go, we're working with an insurtech or a new technology partner. So I do think it will accelerate those, which is really important, but it will really bring the focus onto ones that matter as opposed to just ticking boxes.
Yeah, I agree. I think it'll be an interesting place to sort of see. I mean, there's always that old thing around innovation and distribution, isn't there? And I think the insurance industry, particularly given the layers of it, when you get down to sort of the big reinsurers, there, it's a slightly different game, isn't it, from how sort of banking works? But there's definitely opportunities there. But like I say, it would be nice to start seeing some of these players really start to scale, because then I think it puts competition across the whole piece, doesn't it? But there's a really good question here about Tatiana Marsh. What open banking lessons could the insurance sector learn? I mean, are we going to start to see pressure, do you think, to replicate some of the things that we've seen within the banking sphere when it comes to open banking? So exposure of APIs and data and everything that can come with that.
Yeah, I mean, really good question. And actually James Blackman from Buy Mars talked about this. They've already integrated to open banking for their mileage product. There's masses that we can learn. We've talked about what the new architecture looks like. There's loads of talk about open insurance in general. Insurance, for me, back to this thing as a utility, why can't it just be something we plug into an asset or a service that we love? So why don't you consume the insurance, the whole thing, on a protection level as an API that plugs into the asset, whether it's a vehicle or a property? And then on the flip side, for the claims experience, why isn't it the same? So I do think this has been a really strong accelerant of actually what could we do differently. I want this to be I'd love this to be, should I say, a revolutionary moment rather than an evolutionary moment. And we do, as I'm sure you'll see, in the banking side, see people go, actually, let's move things faster. But actually, how do we reimagine those things in the first place rather than doing the same old things we've always done?
I agree. A good comment here from Michael Giles Cole. How can you balance the tension better between responding to risk, i.e. usage-based insurance, and shaping behavior in a more advantageous way to the industry? I mean, it's an interesting conversation that you always get into, isn't it? In terms of, I mean, insurance, as you say, has always worked on risk bands and, buckets of people in buckets of risk. But when we start going down to that, one-to-one or, one-to-few groupings, then a risk sort of changes quite dramatically at that stage, doesn't it?
Yeah, and this is the debate forever, because if you go down to the most granular level, you will end up paying the premium will be the same of the things as what you're covering, because the risk will be so well known and whatever else. You need those things and those pools in place to make sure you spread it accordingly. And you need people that never claim, and you need people that do claim. It will force, though, the business models to start changing and work out how we can flip the model entirely. And there's a few players out there that are doing this already, and starting to look at how we can change the mechanism in which we look at that risk. I mean, data and insurance goes hand in hand. It has done for centuries. Lloyd's of London was a data exchange, never mind anything else. I mean, it's where you went to get the latest information on what went on in shipping and what's sunk, what's not sunk, what's made it, what's not made it. That information that's been digitized and used time and time again is critical. There is enough evidence and proof out there to say, if you educate someone about health behaviors, which is really interesting right now, we come back to that in a sec, but driving behaviors, you go, we know if we tell you you're driving too fast or cornering too quickly, we can change your behavior and make things lower. I think now more than ever, one of the comments I made the other day was, is having a contact tracing app in your pocket, which we're all about to have, going to change the engagement for insurers, where you sit there and go, actually, I'm okay with telemedicine or telehealth or whatever else. I mean, there's some great things going on, whether it's the guys at Babylon, Bupa, AXA, that have got some great capabilities to put a doctor in your pocket. I mean, the fear, even watching the news this morning, people don't want to go to, GP surgeries if they don't have to. So the fact we can do this over remote or have a GP in our pocket all the time changes that sort of stuff. So I think we will start to see your point about startups and technologies drive different behaviors that will then allow us to get into this whole prevent, not anything else going forward.
Yeah, I mean, I think it always comes down to, organizations can create fantastic services, but if nobody ever uses them, then it doesn't matter, right? As you say, something like Babylon's been around for a while, hasn't it? Using remote GP services. I know we've chatted about it quite a few times over a coffee, but it's one of those ones where now that people realize that these things are a better way of doing it than going and sitting with 60 people who have got something you don't want to catch in a room waiting to be seen. I wonder if the sudden adoption and the rise of remote services of all types will really change the industry forever. Do you think the lasting impact of this on insurance, but also the ways in which insurance companies work? I mean, I sort of feel like it's changed forever, and actually for very positive ways as well, don't you think?
Yeah, I agree, actually. And this might sound odd because I think for years I've been talking about how digitization or digitalization is going to change the broker. I've almost had a reflection or an aha moment that says this sort of event, and we've seen this when people have come back in Hong Kong and Asia. Our business about there is back to 90% of what it was before. I think it's going to drive a better broker conversation going forward, or human to human, number one, enabled by technology, but also a push to regions. Your point about being in Norwich versus London. Why do we all come to big offices and big locations rather than leverage the regions and the space that we have? Now, it's not possible for everyone, but I do think we're going to see a resurgence in the shift to regions, which will level the playing field and make it better for folks that live, north, south, east, west, wherever you may be. Why all go to a central GP if you don't need to? Why all go to a central underwriting floor if you can have regional ones that do the same things and have capabilities out there? So I do think we're going to see lots of that sort of stuff change. And I don't say a worry, but I do think a lot about what is the rebound. And many people I've spoken to don't want to go back to the way it was, because to the earlier point, we've managed to, and got to a really strong point without dropping a heartbeat. What happens to those regional brokers? In some countries, as happens to some friends in Ireland, you would go to I don't understand this, by the way, but you would go to your local regional branch to pay cash in for your monthly premium. Right. Don't worry, I'm not even going to get onto the whole cash thing, but it was a monthly interaction that you do. So what do you do now? Do you do branches of the future? Is it a post office? Is it a bank branch? Do they truly become the hubs of society again, where you can do things at a local level and have multifaceted WeWork style things that are offices, banks, insurance companies, brokers, as little hubs and villages and whatever else going forward? It'll be really good to see.
I think things always, from my personal perspective, things always work best when they're driven through community. If you look at, many insurers have started through somebody having a good idea, through building something up around the community. Even like background story for organizations like Nationwide was started as a pint jar behind a bar so people could get their next house to pay for a mortgage. So, there's so many different things that have been built out of successful initiatives for communities that then have scaled really, really effectively for many other people. But it feels like the insurance industry is on a really interesting point here, though, Nigel. It feels like the future is pretty bright for insurance. We've got really exciting new technologies coming through. We've got great adoption of those things from a consumer's perspective. You've got big incumbent organizations really waking up to the way in which they can, as you say, really serve consumers in a completely different way. It feels like, I get now why you're excited about insurance. Like it's easy to do when there's lots of fun things to do, right?
Sarah says it best, obviously my co-host on Insurtech Insiders. She says it best. She wrote an article a while back, And when you try and attract talent to financial services generally, whether it's insurance or banking, what's your opening line? And Sarah's tagline was, "We have self-driving cars and drones. What you got?" And I think it's a really cool way of going. There's so many cool things coming in. Our reputation, our community, our people, it's a phenomenal place to be. And the tech is just making it better.
I really, really agree. All right, guys, unfortunately, we've come to the top of the hour, so we probably let you guys go and get on with your days anyway. Thank you so much for joining me, Nigel. Where can people learn a little bit more about you and all the good stuff that you get up to at Deloitte?
So normally I'm on Twitter having a conversation, either coffee, Peloton, as you said, or something else. So at Nigel Walsh on Twitter or on LinkedIn.
Very good. All right, guys. Tomorrow, I'm going to be joined by Eduardo Fabian, who is the Chief Technology Officer over at Razer. They're doing some super, super, super interesting things in the fintech space over in Asia, and actually, they make some pretty damn good laptops as well. If you haven't seen them, so I'll catch you guys tomorrow for that show. If you have any suggestions of anybody else that you want me to get on this show, just hit me on david@11fs.com. And we'll happy have a look and see what we can do to get them into the schedule. All right, guys, thank you so much for joining us today. Stay safe, and we will see you tomorrow. Goodbye.